Good afternoon, George Cavaligos for HFT Bonds. Well, that was an interesting day. New highs in the 10-year this morning, right to the 50% retracement of the whole previous big sell-off at 128 even. Bonds weren't making new highs, and I mentioned in the chat room, I said that's a bit worrisome for us bulls because the bonds were lagging so far behind the 10-year at that point. Got out of longs, and now it's time for us treasury bulls to go hunting or reading or knitting or make wine or something, just not to be too aggressive on the long side at this point. I think the 10-year hit some pretty important retracement levels in terms of yield too. 245 was an old important level. That was actually a low yield from back on July 22nd that we hit. And you know, the markets have come a ways, and now it's time for a breather. Remember the last couple weeks, guys, Thursdays have been corrective days. I think we just got tomorrow's correction started a little bit early. So going to look for a nice big A wave down. We might have finished A already today with that big spike low, and now we're going to get a B wave bounce and then another C wave low, and we'll try to discern where that level will be. A lot of times it's against some important previous lows down around 134 even-ish maybe in the bonds. Well, let's take a look. Be patient is what I'm trying to say if you're a bull. And if you're a nimble day trader, you're going to have some choppy trade over the next week and a half, and that's probably a good thing if you're a short-term day trader. If you're more of a position type trader, just be patient, or try to sell these pops for the next week and a half. That's kind of my game plan now. So we'll see what else. This whole Fed thing, it's mind-boggling. They've never been able to discern proper place for where the economy is when they're looking at it, ever. And we read these FOMC statements and it's like, oh my God, they're saying the economy's not that bad. Want to bet? We'll see. Give it some time. Week and a half, be fine. Back to the old lows, like I said, down around 134 even in the bonds, and maybe as deep as what was it, that 123.26 area, 124 even on the 10-year. So we'll narrow down those levels once we have a better idea of where the next bounce ends. Really, that's my favorite trade. You're looking, say today was the A wave down, we're bouncing, let's see where this B wave bounce ends. And then we can discern where the C wave would show up to at least a certain degree. Then we have to determine if it's a triangle or a wedge or a double zigzag or a single zigzag. The problem with trying to discern bottoms of corrections or tops of corrections. It's always it's an art. It's not a science. So it's Thursday tomorrow. A lot of data tonight. Got to really keep your eye on the calendar. There's a lot of data out of Europe and out of Asia tonight. BOJ meeting, I think the World Bank of New Zealand meeting, a bunch of economic data out of Japan, a bunch of economic data out of Europe too. So stay nimble, and we'll see what happens. Have a great night.